G'day there, guys. G'day, Lauren. Now, just let me know if you can hear me clearly. And I apologise too. I've got a feeling there might be something just wrong. Or the internet seems a bit slow today, even though it's 4G internet. It's normally pretty good, but it seems that it's coming through a bit slower than normal. It's cutting out a bit, so sorry about that. Just in advance. If it does cut out, just it'll re-establish the connection. So it won't be my end stopping it. It's just it's my end sending the actual data through, uploading it. And if you don't remember, we are getting what's it called? ADSL, not ADSL, NBN here. So I've heard a few dramas with NBN as well. I've heard people say about dramas there. It could be. Is that coming through? No audio. Can you hear me, guys? Just someone put a hands up. It must be very slow. That's all. All right. Let me just see. I think it's just coming through very slowly. Might even be YouTube, to be honest. Ah, great. All right. Yeah, like I said, we're just hopefully getting NBN, and I have heard dramas with that, but I think it should be a lot better than what I'm running through now. ADSL2 is rubbish coming into our house here. Just where we are, it's just a joke. And then I've got 4G, and I've gone over this before, so I had to get a 4G modem that goes through the phone lines, which is still a bit of rubbish, and it seems to be just really bad today for some reason. I can see the numbers chopping around. So this is the program we use. It won't come across. Anyway, doesn't matter. Yeah, but even the 4G modem, it's not giving me anywhere near the same as just through your normal mobile phone. So they like to cap it to make sure that you pay them more money if you want something better. Anyway, let's see how we go. I'm just watching those numbers flick over. Probably just drop out in a minute. So sorry about what's happening, guys. It's probably a public holiday down here in Melbourne, so people are just struggling a bit. All right, so we've got, for anyone that's new, welcome, and thanks for joining us. And if you do like what you hear, if I can impress you enough, it'd be great if you can leave a like at the end of the video or end of the stream. If you have any questions at the end, just remember you can send us an email to support@tradesetup.com.au and I'll get back to you there. We've got TradeSetup on Twitter, the top left-hand corner you'll see on the screen. Top right is Facebook, and the bottom right is linking to us at YouTube. So if you find our YouTube channel, just subscribe there. What is it? At TradeSetup, capital AU. So if you search TradeSetup, you'll be fine. G'day, David. How are you, mate? It's good to see new people in. I think it's good. Get tired of hearing from you oldies. I'm sure you get tired of hearing from me. Rabbit on about the same stuff. All right, let's minimize that. I'll close that and I'll just reset up my, there we go, get a transition there, done. So we've got a couple, for us, we're having a cracking day. God, SPT, anyone's got an SPT, it's up 23% today. And like I think I were just saying, that's one that we've had since 90 cents. It's up, God, what's up, about 110% at the moment for us. And this is sort of what driving me to talk about taking profits today, because in all honesty, it can be just as bloody hard to hold on to gains as it is to get into the market. So, pardon for my language, but it is a test of patience in the face of giving up further gains. All right, we should be back on board, guys. This is horrible today. All right, so yeah, we're going to have a bit of a chat about holding on to gains and when's to get out. I think that $2 magnet's on SPT. You can see it just tipping up the $2, but again, I don't want to second guess it. So I'll go over that in a minute. So the US on Friday night, US was slightly down. They had employment data come out, which is a bit mixed. So generally, when you're looking at the employment data, you're looking at the new jobs. You're more worried about job growth than anything else. But generally, if you don't get job growth, you can tend to the other numbers reflected as well. They had job growth was less than expected. So they were expecting 120,000 new jobs or somewhere around there. I think they only got about 20 or 30,000 new jobs. So less than what they thought. And the average earnings is kicked up, which is sort of the opposite. So in the opposite scenario, that's they're getting paid more in essence. Hourly rates going up. So that's a good. And the unemployment rate went from I think 3.9 to 3.8% or something like that. So it's a bit of a mixed signal, and the US dollar was getting, I think it was rallying prior to that and then sold off just on that number, but it was sort of capped both ways. It was capped on the downside because those numbers, I mean, when you break it down, weren't overly bad. Um, but at the same token, I mean, there's nothing flash. You can get those, on a month by month basis, you can get those numbers that will sometimes be stronger than expected, sometimes be a lot less than expected, but that's just the way it is. People are not consistently employing every month. There's going to be those patches where they don't go quite as good. So I think with the US dollar, um, not so much the US dollar, sorry, everyone's starting to focus on, in the US anyway, the lack of information or more news flow on trade. It's all about global growth. And we had, was it during the weekend of last week, sometime, probably Thursday, Friday, when the ECB said they're worried about growth and they're not going to raise rates potentially this year at all. And they could even increase stimulus, which is not a good sign at all. So, Eurozone's concerned about. We've got Brexit still kicking off. They don't know what they're doing over there, which could cause a bit of a kerfuffle. Really, the only one holding up the global economy is the US, and so their numbers. If you start to get something breaking apart in the US in the way of numbers, then that's going to be a concern for people, and they're going to be focused on that. So, and it may mean that there's a little bit of a storm in a teacup when you get something about China. They could come out like I was saying before, they could come out, release, or they can sort themselves out. They can organise tariffs. It's all good. It's all good again, but the market sells off. So on the back of what we've all been watching, this market tick up on the back of good news out of, a deal being done, and all of a sudden, deal gets done and nothing happens. It actually sells off because buy the rumor, sell the fact. Plus, now we're going to refocus on what global growth is doing. Jobs are still kicking up in the US, but there's sort of maximum capacity on employment as well. So there's a few things that could work against it. But we'll see. We'll see what plays out. And they are overly extended at the moment. We are too, but again, it's always no reason to get out of positions or don't put on a position because you think they're extended. Because I can't remember that saying now. Things could always get more extended, a lot more extended. And if you're left on the sidelines because you're trying to put a bias onto the market and you're not trading what you see, and also just remember, it sounds bad, but the pros don't know what they're doing either. But no one knows what's going on. And you've got to remember that. It's a key fact, I guess, if you're starting to read news and you start to form a bias of, oh, I've read this is saying it's going down. Oh, so they're saying it's going down. Sometimes analysts are the last people that know what's going on. I mean, all they can do is project what they think because of this, this, and this. But the market's a psychological animal. It's not. It's not going to stick to and conform to numbers. If things are looking good, look at SPT. Everyone, you can get on Twitter and you can see people have been trading it, have jumped in and jumped out, and they've just been missing chunks of this trade on the way up because they're trying to put a bias onto it. It shouldn't be up here. They're not earning any money. Small market cap. It's well and truly factored in. It doesn't matter. When psychology kicks in, things can always go a lot harder. So that's why it's important not to get, oh, look, it shouldn't get through 140. Trade 140, I'm out. Okay. And then all of a sudden you put on another, what's that, 30% since then, roughly 30%. And you've just left it on the table for no other reason. The market wasn't telling you to get out. Nothing was telling you to get out. You're just trying to put your biases onto that market, onto that share, whether it's a share, whether it's an index, or whatever it is. Look at the index before we get carried. I didn't think quite, back here, I didn't quite think this is going to roll over. Sorry, I thought it was going to roll over. I didn't think we're going to get up through that 59.50 mark, which is sort of that key resistance zone. I'll draw that up actually. Let me get my chart out. I sort of draw up what we're talking about. And there's reasons for that. I know. make that a bit thicker. That, and oh, it doesn't matter. So discard. So we're looking at this, all right, and at that stage, you're just looking at it thinking, oh, okay, we're not going to get up there. We're probably going to roll over here. It's a key level. You know, it's all this market's been heading south. You can see it's really, you retrace right back up here. I actually didn't expect it. Thought there was a bit more fear in the market. We could have drove lower before we bounced, but instead we pushed down here just before Christmas, and then boom, come all the way back up here. So at this stage, I was really looking for that. It was getting a bit extended. Maybe some sellers are going to start to take profits up here, but it was getting soaked up, and we just couldn't get through that. There's only a minor level below 53.20 or 30. This key, I'll draw that in a different color, the key anchor to that trend up. And unless we get through that, this market's not going down. And instead, we popped up to the upside. So I didn't want to, I wasn't going to bail on things just because I thought it was going to go over. I wasn't seeing the price action. I can, whatever is in my head, it doesn't matter. That's the last thing I should be listening to. What I should be doing is just watching that market and trade what you see. As soon as it got through those highs, especially when it got, you know, on this day, it got through that high and settled above here. Okay, you've got to be in the market. You've got to start to adding to positions. You could have done it down here. I mean, if you're quite aggressive, you could have probably got off this high low, but I'm not a big fan of the trend is still down. It hasn't really broken any anchors. Getting in here, that was just after the new year, wasn't it? The second or so of Jan, 1st or 2nd of Jan. So it was a tough ask to get in there, but as soon as it broke through these highs, when you would have thought, okay, extend it up here, how many more buyers can drag this market up? And look where we've gone to since then, another 300 points, about 300 points. And then even here, I thought we might find a bit of resistance up here. We did back off in this candle, and boom, straight back up. So this trend has not changed ever. We still haven't changed yet after a couple of down days. So even though you get a couple of down days, what it does is sucker in a lot of sellers. Go, I'm out. They get out, and they turns around and chases them back up, and they'll have to be chasing the market if they want to get back in. This market, the fact that we've gone up a couple of days and held above 62 of these previous highs, even this minor washout level, look, we could just hold here and straight back up and into new highs. There's no reason why we can't. So what I'm trying to get at, I guess, is just try not to let your biases, what you're listening to, who you're listening to, into the market. I mean, you can listen to me because I'm a legend, but you know that goes without saying. But try not to put your biases on. You've got to follow, if you're a technical chartist and a technical analyst rather than fundamental, use your charts, use your ASX to tell you what's happening, because all data from everything is shown up in the ASX 200 or top 200 stocks anyway. But if you could be looking at individual stocks and they're looking weak, and then you don't want to get into anything else because there's a few that you're looking at, but you're not taking into a picture of the overall market. Okay. So just try to trade, you know, always looking to try to trade what you see, not what you think. And that goes what we're trying to talk about today. So I'll just go into that a bit further, and then what we'll do is open up and we'll look at some shares. So put in some shares when you're ready, and then we'll just go over those. You can put on, if you want to look at the Aussie, I mean, not cracking hot FX trader, but I'll give you my opinion. Just if it's wrong, just forget about it. So what we're trying to do, and this has really brought up this for me, this key, you know, look at this. This is SPT. And we can go to all data. You can see it's been a cracker, and this is on the back of APT, Afterpay, and that sort of industry has really kicked on. Now look at this, especially today on a daily candle. Today is just a massive expansion day from 165. It's trading at nearly 195 now. People just keep buying it up. If you thought this was an expansion candle here and you've got out, then you left a lot on the table. Even intraday, once it started kicking on, this is probably the only really day you've got a bit of price action. You could have squeezed you out, but then you should have been straight back in, closing through the highs. But the market since then, the last 4 days, has not looked back, and it has not shown any sign why you should be out. You should have really just been following this up. And the whole thing is, when you're in, there's two things. If you're coming into a resistance zone, just try to find, this is SLR, and this is another one we've got, which is going great guns. We took a partial at 69. I think there was news out, something to do around the 69 mark, 67 mark. We got out at 69 ahead of what I saw as a massive offer. Didn't want to get out of the rest, so we had our stop right down here. So happy to raise the stop around 61. I figure if it pulled all the way back to 61, there's a good chance that something's wrong. But instead, it's just pulled back. It's held a higher low, bounced off these MAs, and just traded through the highs today. I was a bit preemptive with moving that stop up, but you can see that on Friday, the price action sort of pulled back, popped up, had a couple of days where if it was going to roll over and do a lower high, build a lower high, and take out this low, it should have done it about then. Instead, you got a green candle, pushed up through the highs at 71.5, say 72. And that's when I was happy. Okay, raise your stop. It's just bouncing off the MAs. That's an inside level. There's different ways we trade, but different things I'm looking at. But that was one of them. Where normally, if I was going to enter, that could have been a nice little entry through, was it 71.5, 72? A buy with your stop just below there, minimal risk. And generally, that's sort of, and I'm looking at this style of entry. Entry, the market's pressed up, it's pulled back, you've gone, you pull back again. I'm looking at this entry when you buy through here, and then you can minimize the risk. That inside level, and you're always looking for the breaks. If you get that inside level, it's a continuation type of trade. You can really reduce your risk, and it's a cracking entry because a lot of the times, not all the time, they lead to at least a retest of that high or a break. And if you get a retest of the high and you're up slightly before it fails, a double top, whatever, then you can bail at a slightly profitable trade or at break even at minimum. You're not really taking too much risk on it on that trade. So that's what I was looking at for SPT to raise the risk. But what I was getting at, which I veered off from, the point I veered off from was SPT is coming into a resistance zone. So if the market's extended up here, you're coming into that 80 zone, anywhere sort of around where we are at the moment, previous highs, even not 80, but can be 76, up towards that high there, about say 80 cents. It's coming into resistance zone, and generally, what you're expecting is when the market's stretched into that zone, into a previous resistance zone, it's a key level where people can just book some profits. Whether they're taking a partial or closing out completely, but or you do expect some sort of reaction off that level, whether it's support or resistance. The market's coming into stretched into a support zone, you expect some sort of reaction off there, and then you're potentially looking for a higher low to buy into. Or when you just flip it over when you're looking to get out, and just remember when you're getting in and getting out, you should use the same techniques. It's just flipping over. If you bought to get in, you should be flipping over the entry style and getting out in a similar way. What I mean by that is if I'm buying off a higher low, I'm just flipping over and getting out on a lower high. When the market's into a stretch zone, into a resistance zone, or if it's just starting to run out of steam, that's my technique. And what I'm trying to do is take the bulk of the move up. So with SPT, we know it's coming into a resistance zone, but it hasn't. We've got half hours left, so basically we're waiting to take the opportunity just to get out of that last bit. But I mean, we could be that this could blast through 80 and it not look back. Okay, so be it. Great. I'm happy just to keep raising my stop level on that and let to see. I don't want to get out. I just put it in that. Put in my offer at 79, get hit at 79 when the market's going through it. Last thing I want to do, and then see it up at 85, 90 before you know it, even trading the full round figure of the dollar. You do not want to close out because this could be the one that kicks on hard. This could be a 100% run up for you. So you don't want to leave that much on the table. You would rather, I think, if it comes into a zone like that, you might want to tighten your stop up, but always leave it open and leave it open just to see if it does reverse and you get stopped out, so be it. Maybe stops in the wrong place or it's a bit too tight, but you want to give it that chance to kick on through. Because if it's a strong market and this thing's looking good, you still want to have some skin in the game. Rather than get out and watch it and go, look, I can re-enter, and then you're watching it go up day after day and go, oh, I just can't re-enter now. Then it becomes a psychological game. You just cannot re-enter. You cannot chase it. And then, lo and behold, you can guarantee there's going to be times when you go, I won't chase it. It's going to pull back. And then the next day, if you got in the previous day, well, you would have been up. And then the same thing happens day after day. Oh, if I got in yesterday, I would have been up. Oh, if I got in yesterday, it would have been up. You know what I mean? So that's that psychological game at messes you. If it starts doing that, walk away from it. Just leave it. You've stuffed it up. Leave it. But ideally, you want to, if you start taking your stats, and I can only talk from experience, I guarantee, especially when I was trading intraday on futures, I would take my stats at 20. I'd probably be right. What was that? 12 out of 60% roughly. So 12 out of 20 trades I get right, and I get wrong. I get stopped out on the others. So my hit rate was pretty good. But what I would do, I'd always stuff them. This is years ago when I was trying to get the entries weren't too bad. So that 60 to 65% right is a good stat to have. And all you're trying to get is, say you get 2 to 1. Fine, that's great. Even 1 to 1, you can make money from that. After commission, it might be a bit tight. You might be break even, and that's pretty much. I was roughly break even to slightly up over 20 trades, but I can guarantee you one of those 12 would be a runner that I would cut out short, and that can completely or dramatically change your stats. And I would tell you, every one out of every one of those 12 trades, when they run, there was no reason for me whatsoever to get out. And that's the one you're trying to get. And if you have to give up a bit on each trade, so be it. It doesn't matter, because that will more than make up for it when you get a runner. And that's ideally what you're doing. That's what's going to really, I guess, improve your trades. And when you're doing, say, 1 out of 20 trades, sounds like 20 trades a lot, but you can do 3 a day or 4 a day quite easily intraday trading. So every few days, you're getting the runner that you close out, and you're sitting there thinking about it, say, on a weekly basis. I could be nice and profitable, and this is a really good way. But my psychology was just, that was my biggest problem, was getting out of that runner. So the last thing you want to do is just take yourself out. I don't think the last thing. I mean, there's times when you're up 100%, like we are in SPT. We've held it nicely, and it has been hard going. Watch it keep ticking on strong, and you go, this is too strong. It's overvalued. All these sorts of things are going for your head. Why you should close it out. But ultimately, you just don't, because you don't know what's going to happen. You don't know who's driving this market. You don't know what the fear of missing out is doing to the market. And the fear of missing out, I can tell you, it's just kicking that. And that's um, that irrational market when it just rallies high. You're never going to argue with that irrational market, because if you're on the right side, that's what you want. And that's where you're going to get the runners, and it's going to kick on hard over the period, a really short period of time. So going back again to this, if we're stretched like we potentially are right now on the weekly chart, we're getting stretched in that 80 zone. Maybe we've got a bit more to go. That's a different scenario than when you're in SPT, for example. SPT's got clear skies. There is no resistance zone. There is nowhere for people to take a profit. So what it does is generate that FOMO, that fear of missing out. The people are going to chase it because it's not coming to resistance zone. They just see day after day. They might have been looking to buy it around $1.10. They missed out. Okay, it's too stretched. I'll wait for a pullback the next day. It hits $1.20. It didn't pull back. It didn't pull back. And sooner or later, they're just going to chase it, and you're going to chase it. And because there's no resistance zone, this thing could get pushed. People just keep buying it up, buying it up, buying it up. And there's no clear zone in sight where potentially you can expect a reaction, as in SLR. Now, SLR, you would expect something, what we say, about an 80-cent mark, maybe. That's all great because we're up well on that one anyway. So if it does react off there and we get our lower height, we're out. We can bail. But there's times when, I mean, that's what I'll be looking for anyway. So if we just go back to SLR, I'll do it again. I'm looking for that lower high. Potentially, something like this, it rallies up into 80, you get this lower high, and then bail in the second half. We might have to give up a bit, but if it does blast through, I still want to be on it. I don't mind taking a hit on a bit of return, because it has been a good one for us anyway. And if we can do that time and time again, we're going to enable that we're part of that runner. We're in the market when the market's starting to run, or we're in the share when it's starting to run. And it's just making sure that you have got skin in the game if something does kick off. So with SLR, it's going to be hard. What you've got to decide is, what is your trading style, what you want to do. I mean, I don't blame you, in all honesty, if you took something off at, I don't know, 150. I don't know what you've been up 80, 70 or 80%, 70%. So if you took it at 90 cents from the alert, I don't blame you for taking it off. But like I was saying before, some of the hardest things, sometimes when you have a bit of a psychological problem, getting in can be hard. But the same token, I mean, when I had a psychological problem, it's not getting in that was too much of a problem. It's getting out. I would take it too quick if I'd have a couple of losses in a row. It's actually quite hard to make yourself stay in that trade. Don't take it off, because this is the one that's going to help you out and it's going to kick it off. So we got stuck recently around 95, 96%, 97% return on our over 3 years. And we were sitting there for months, and we just been edging higher, pullback, edging higher, pullback. Net effect, we're slightly edging higher every little bit, but it was just frustrating to see that, constantly jump in and get stopped out, and then see these ones. But what we're doing is giving ourselves every opportunity. When one starts to kick off, at a turn, it could reverse on us to stop us out. Okay, that happens. And that was happening quite a bit. Now we've gone from 97 to 105%, in the space of about a week or so. Now that's what you want. And that's because of the SPT, and there's a couple of others that turned in our favor today and starting to kick on. And that's just because all of a sudden, just as many times as you've had those series of low losers or ones that don't do anything, you're going to have the same with things that do something. But as long as you're sticking to your plan. Now, if you get those ones when you start losing, or you take it off and then you see it go down, it confirms it in your head. Okay, what I should be doing is it's great. What I should be doing is getting out. But then you're going to have those string of winners that kick on, and all of a sudden you're leaving a hell of a lot on the table. And yeah, you might have had a little bit of a profit, but it's not helping your stats. You're not making the most of your trading. So what you're trying to do, decide what you're trading, how you're trading, what your style is, and then sticking to it. And my style is let it run, see how it goes. And it's taken a while to get that into my head, to be honest, but let it run. And this is proven, that and say SLR have both proven that when you do let it run, things can play out nicely rather than get out here because we saw these couple of candles on the pullback. Just get out and see what happens. It's gone back up again. And now we can raise our stop. We can potentially look to tighten it, maybe up at 80, see what happens. If we get a lower high, okay, then we bail. If we don't, keeps going through, then we're on board. We're on board that runner and SBT. So that confirms that for maybe 5 trades we've taken a bit of a hit on. Go, Shirley. 5 trades we may have taken a hit on. This is more than paid for it. I guarantee you, this is more than paid for it. Just this one trade being on the right side of this runner. So long story short, what we're going to be doing now is looking, how do we get out of this one? Because anyone could look at this trade at the moment and to say it's getting stretched, but what no one knows is where it's going to. And this is, this is the key in trading. How do you get out? When do you get out? Rather than just getting out, I would rather see, like I said, a lower high. But if I'm not going to see on the daily, I mean, this could easily completely capitulate now, take out 65 and go and end on a red candle for the day after a big blowout. You don't know because this volume, don't forget, just 1 second there, guys. Just 1 second. All right, sorry, my little fellow is home today, public holiday, and he's just walked in the room, caught me off guard. Very quiet, but not allowed in. So where was it? So this one does reverse on us, and then start to capitulate a bit because everyone's loaded long. Every man his dog's loaded long on this one, and you've got the capital raising people who are watching this and just going, "I'm a legend. I'm great." Everyone's going to be bailing for the door at the same time, so this could be a big rush for the exit. And one day it's not just going to be pulling back; it's just going to completely capitulate. So you don't want to have a too wide a stop. And I'm never happy to see things just kick on like this and go near vertical. If it's going near vertical, I'm going to raise my stop every time, but I still don't want to close out. So the way I do it, I mean, what I'd be looking for, this is a weekly chart, you can drop it down to the daily. Because this is a daily, I'd just about be happy to drop it down to the the 30-minute chart. And what I'll do is picking that up and I'll drag that in. So you can see, you can refine your stop. I have put it to 160 because I figure if I put it below the open, it's gapped up on the open. Every other day it's gapped up and gone sideways, consolidated and continued on from there. We've gapped up from the open and we've kicked on. Sorry, just a second. Just a second there, guys. All right, and that was the other kid. So, g'day, hello, how are you? Have I checked? Yeah, no. To be honest, I haven't really gone through that, and there's a good chance that they could be better. And I think someone was saying that if I hadn't taken 50%, they could be better. I mean, they could be a lot higher. Who knows? I should actually go through and check that. But the means going through 300 charts, which is going to take some time. I'll see if I can do it actually, just for shits and giggles, I guess. See what I was saying? Yeah, so I'm happy to go down a different time frame. I mean, if this was the one, say on Friday, you can raise your stop. You can pretty much leave it, after a couple of green candles, a couple of bouncing around that consolidation, you can raise it to say, you could have raised it intraday to just below low 148, put it at 145. I think we did that at maybe 140, 145, gave it a bit of room. But like I said, at this stage, the way that market's reacting, I don't want to give it too much room. I'd rather go intraday and get stopped out intraday. And look, if I miss out on it, if it keeps going higher, you've got to remember it's up 115%. So we are still happy with that, but I don't want to. I don't want to just get out here and find that it's about $202.10 before you know it. This thing could just go nuts. But what I'm anticipating is maybe it's more from the daily chart. You can see this volume picking up. We had good volume at the start. It's been building up here. Volume eased off when it was in pullback mode, and as it started to ramp up a bit, hold some high lows, the volume started picking up. So there's going to be a bit of distribution somewhere at some stage. But I mean, like I said, I don't know where, and I don't want to take the chance of missing out on too much if I'm going to try to guess that. So I'm happy to use my 30-minute chart just to try to tighten things up at the moment. I mean, I could potentially put it to 180, really tighten up at 180 and just see if this does back off from 2, then we're going to get hit on the way down, and you're probably get a lot of volume coming into that sell. But we'll see. We'll see. I hope that makes sense to you guys anyway. But I generally don't use MACDs. I don't use stochastics to get out. I'm looking at purely the volume. If the volume comes in on a pullback, then you've got to start to worry as well. You've got to be concerned if this thing goes into pullback mode and then the volume starts to stack up on the sell candles, especially if you're looking at the 30-minute charts, then it's not getting soaked up and it starts to pop up and build a lower high on the intraday, I'd probably be happy to take this one off. If it's at the start of the trend, yeah, it's a different story. If it's here, I wouldn't be going down to exit intraday. I'm using my daily price action. I'm using my high lows off my daily chart and things like that. So when it got through 90, it had this pop through 90, gap down, or opened a bit weaker on this day here, but we were still below 80 cents on the stop, and then it took off the next day, and it's never looked back. So this green candle took out the highs, happy to move it to $1. But then since then, we've just kicked on up. As you get more and more extended, you've got to find a way to tighten up your risk, but still have skin in the game. I think that's the name of the game. Hope that makes sense to you guys. Hope that's helped out. I mean, like I said, if it's coming into a level, let's just look at what else we got. Wally's doing well on the downside. So say we're sitting up, I think it's 88. We're up about 4% on Wally from our short. So now we've got a question. Okay, that's looking, these couple of days are starting, maybe they're getting extended on the downside. Maybe we're going to find some buyers stepping. Now, where would be the most likely area they're going to start to step up there? Maybe step up the pressure on the buy side. Are they going to support it? Are they going to step in and start to maybe accumulation process on this? Or is this thing just going to cave in? So we want to, and that's why I do like my half 50%. But you can take it in thirds as well, exits in thirds if you like. But that's why I like to take it. I like to put some profit. What am I trying to say here? Like to book some gains, which I think statistically it's doing okay. We're still doing well. And I'm always happy to book because you never know if this overall market's going to cave in and you're sitting on something that's up 20%, gaps down on the open, you can just clean off all that profit. I mean, something untoward happens. I think this market could be if something happens, it's on a hair trigger. It won't take much to actually cave in a bit. So yeah, we got Wally, which is short. I mean, that's coming into some zones, so it's not in clear space at the moment. So we're going to take into account. It's just got through that. What's that mark? These lows of 1400. So sorry, $14. It's got through that today. So the next sort of stop could be lows of 1337. After that, you sort of got that $13 mark, and after that, you really got nothing too much. So if it gets through all that before taking a partial, then okay, we might just see where it goes and really try to tighten out stop. We start getting the market react off these levels and finding support. Maybe a retest, we take some off. We'll just have to see how we go. But when you've got levels in the way, it's a clearer sign potentially to take some risk off the table, especially if it's stretched. CVN it's not in the clear sky. You're going to have the next level up. It's just got through this high. What's that high? 44.5. We're at 45 now. So it's really slow mover, but the next level on the upside is 47. So a couple of cents up, it may be prudent to take some off because after that there's not much, and we're starting to get, we could be getting stretched in the daily, go down to the weekly. We're starting to look stretched in the weekly. So you're trying to look for zones or levels which could be running out of steam, running out of momentum to book a partial, or if you're looking for your final exit, it's always worth to give it a bit more room and just let it go to see. You want some clear signs of a level holding up or a level caving in or something like that before you bail, because you just never know what's going to happen. Qantas is a short, which is not going in our favour. So when we get our stop in place, we'll see what happens there. SBT, a kicker, and SLR is kicking on nicely, very nicely. So any questions on that, guys? We've got a couple of shares to go through, but I hope that's making you a bit of sense. Like I was saying previously, getting in, if everyone's got a certain process, I know what mine is. I mean, most people know what mine is. I'm looking for my high low. I'm looking for that. The weekly's had a trend. That might be a weekly correction, and we're looking to rally again on the weekly chart. And I'm going down to my daily for my entry off a high low when I've got some sort of confirmation that buyers are starting to stack up and pressure the market higher. Now, what I'm trying to do is just flip that over. When I'm buying, it's off a key support zone, sort of maybe a double bottom, whatever it is. I'm looking to basically flip it over. Same sort of process, but on the reverse side, looking for coming to resistance zones, getting stretched, a lower high, maybe a double top, all that sort of stuff before I might have to close it out or really tighten it up to close it out. If you're in the clear sky, it's a bit harder like SPT. It's just got no real resistance zone, so this thing could just keep going. So you might have to take a different tactic to get out. But like I said, you just want to let it go to see how far it goes. All right. So where are we at the moment? We'll go into RMS. If you do have a question and we may not get to it, just email us. Like I said, support@tradesetup.com.au, and we'll go from there. RMS. Let's go over to here. Don't want that. So RMS, you can see on this weekly, we're coming up to this. It's got sort of some clear pressure up, potentially. The only thing I don't like about it too much, on this weekly, and then we'll go into the daily in a second. It is getting a bit stretched up to here, so it's quite clear that you've got zones up here that's coming into play. So if you're new to this stock, looking for a buy, just be careful. You've got these couple of little zones that's into play. Maybe we're just getting through there today when we could back off and close below it. We've got another 75. So how much fat can be in that trade? Look at the legs up. Really, maybe an entry through here. That was about it. Then it backed off. See, if I'm thinking this is a strong market, I'm not liking that something that's just oscillating between support and resistance in the past. If it's rallying up into resistance, you'd rather see, say this is our resistance zone up here, big rally, you'd rather see this sort of minor pullback and start to hold up at this level and then hold a little minor lower high, because that's a sign of strength when it holds in the top third of this leg up. This is the leg up we're talking about. So this leg up here, it didn't, it just basically, I'm all the way back down to the start again, back down to below 40. And now what we've done is pretty much that leg up has taken us straight back up to 66, 65, 66, 65. We're at 66 and a half now. So it's taken us straight back up in that resistance zone. So I wouldn't have got in here based on that weekly. It would have been a bit tough for me. And we're getting extended away from the MAs. So the MA is pretty much oscillating between gains and losses. We're getting on the top end of the MAs for the weekly. So for me to want to buy, I want a clear setup on the daily chart. But just be wary that on the weekly we are up into these resistance zones, potentially where you would expect some sort of reaction. We're right there now. So this where we could expect some reaction up. Last time we were extended up there, we're extended now, we're extended there, we were extended up at this high. So anyone that doesn't know how I use stochastics, and then you guys, way I'm looking at it is just, it's not overbought and oversold, it's just pressure of buying. We run out of pressure when you get overbought. Pressure of selling, running out of players to continue selling when you're oversold territory. Like I said, the reverse on the upside. If you're looking to buyers, support from new buyers, you'd rather see it halfway because you've got a long way to go before it gets overbought, meaning there could be a long one. A lot of people in the sidelines waiting to come in to keep pushing that market higher. When you're sort of hovering in overbought territory, you got to question how many people are on the sidelines ready to come in. Okay, so that's the way I'd sort of use it anyway. But it's not a reason to get in and out. It's just a reason to be careful or tighten up, or if you're in a position or anything like that. So yeah, that's the weekly. Drop it down to the daily. I mean, potentially this was an entry through 60 on Friday. You could have taken that. But right now, I wouldn't be entering it now. I wouldn't have entered it through 65 because my stop is too wide on that one, below around 55. What's that? 10 divided by 60, sorry, 10 divided by 55, 18% stop. I don't like that. So I wouldn't have done that. And I think having that wider stop, it means you've got a very small position. So getting one-to-one makes it a bit tougher. So I mean, really, you could have entered on this candle. You can see that was that inside level. If we draw that up, I think that your entry is pretty much gone. There's no reason why you couldn't have entered on that, but you just got to be aware of where you are on the weekly. So this is your leg up. We've come back down. We've popped up, pull back, and gone. So that's your inside high low that we just discussed before. Prime setup just in here, which you're gunning for, which we've just gone through today. You're gunning through at least a retest of the highs, which is around 65, and it's gone through today. So really, with this one, that's playing out okay. You don't know exactly where you're going. So when you're trying to figure out where you're going to, where you could find some problems, that's where you're flicking back to the weekly. And you're looking at that going, you said we're up here. I'm going to have to maybe run some tight risk management on this where we could easily pop up to 75, which could be a good little trade on the hands. Before we could hover around overextended up here. So no reason why it just can't keep going. But you just got to be wary when you're trying to manage your trade. So that's one. Where am I? CGR. CGR is not too bad at all. Low volume, but for anyone that's interested in those low volume moves, this could be one. So it's the first time on the weekly you're starting to sit back on top of the MAs. I don't like to see these kind of big sell-offs bang straight back up again. I'd rather see maybe a retest, chop around above the MAs, and then start to go. I'd like to see a bit of time under my belt or under its belt before it starts to kick off. Because two things with this one, just looking at the weekly chart first, there could be, I don't know what Lawrence could be looking at. We've got, if that's your move and then we're breaking out, you could have got in here just below, off your high low. Your risk is there. You're still in front at the moment. Don't like this rejection candle, or this could be what's starting to play out. If this is starting to play out, that's your resistance zone where you could be rolling over here. This could be all part of, let's just go. So if this is part of two moves, that's your first move down. Potentially that could be your second move down, which could take us just at a guess down to 30 cents from up here. So that's what could be playing out. I mean, I'm always looking in the market to move two moves. So one up, two moves down, and then potentially look for my higher low after that. If this is your first move down, like I said, this could be your second. So you're just going to measure it out. If that's the case, then we could roll over from here. So it just depends what's playing out. And like I said, I don't particularly like this kind of sell-off and then a bounce straight back. I'm never a believer that that's the actual move that's happening. Don't forget, this could be, let's clear this up. I'm making a messy chart now. This could be, if that's the case, and this, I don't trust it, it's because you got 1, 2, and your two moves up could be the start of the next leg down. So this is what I'd be looking at from there. That's my support up. I'd be trying to tighten it up at any opportunity I could. If I could tighten it up even now at say 47, my entry was say 50. It's not below a high low, but generally if I'm going to tag on that, it's probably breaking down, and that secondary move down from here is starting to play out, potentially down to 30 or at least down to 40. If it trades on 40 and bounces again, then you just repeat the process. Look for your high low, up we go. But we'll see. Let me just lead some of the Shirley EGO entry at 480 with a stop loss of 0.8 out of 3 to 1. Let's just look at that. EGO. I'm guessing this is in the US. Okay, could be in the US, I'm guessing. I think, Shirley, you trade the US a lot, don't you? Because if you're trading this, you've got a problem. Anyway, let's go back to here. We've got that. GDX, what's that doing? Yeah, kicking along nicely, holding higher lows. And this, you can see we rally back up, pull back to the MAs. I don't mind that, like the little pull back to the MAs and start to bounce again. We bounced up. Potentially we're going to be pulling back to the MAs soon. But oh, look, that looks a bit better. That's actually not too bad at all. We could be coming in a bit of problems at 33, which is somewhere around at 34. These two highs here, you can see it's had a lot to clear out and has cleared through a few of these lower highs all the way through here before we bang straight down and bounced up again. But that is going the right direction after this essentially a double bottom. Bottom here, bottom around here, double bottom, cleaned out a few buys, especially this little spike down. That would have cleaned out a lot of buys through here. 2017, 18, that's cleaned them out. It's turned around and just retraced it. It's always good to see that too. Get a bit of a clean out and then turn around. And because anyone that's fallen in love with it, maybe stopped themselves out, is going to be chasing it back up again. It's that revenge style of, or that mentality. What was the next one? SPY. Let's just look at Brent. Hi, mate. Resistance at 280 if it doesn't take out 275. Let's have a look at that. And then we'll get back to Lawrence stuff. Just find SPY. Are you on the daily? Take it to down. Let's have a look at that. Go away, you. Go away, you. All right. So for me, these are the levels I've had on. SPY or the S&P is notorious for washouts. I mean, pretty much most markets are. Oh, just kick my. It's pretty stupid. Just kick my screen out. So the US, when you're talking FX currencies, are prone to washouts a lot. So if you look to buy in a breakout through a level, you just got to be careful of what's happening because you can get washed out, get stopped out, and it turns around and goes back in your favor. So you've got to be prepared to get back in again. Indices, same sort of thing. They can tend to wash out before they go. Look at this. Took out this high here, washed them out, had a pullback there. So if you're a bull at that stage, then you got your lower high, bang it straight back down. You don't tend to want to see it get through a level. We'll draw it up here. So that's your level there. You don't really want to see it's approached the level. It's just gone. Oh, that's probably not it. It's gone up to a level, pull back, had a deep enough correction in context of the uptrend, and then pop through a level, only just, and then start to reverse. You'd rather see this just continue on, as it has previously, go past the high by 50% or so, rather than just go past by a few percent and then reverse, especially if it's a key level or a key high. You don't want to see that. And I think that's what this little pop up, you can see this, well, this popped up here, washed out. So if you're buying that, you've taken a bit of heat. It's turned out all right. So I think a lot of the times you'd be better off looking for that pullback to the MAs and uptrend in the S&P or indices or FX or anything like that, whereas you can sort of afford to, on shares, individual shares, you can afford to buy on a breakout as long as you can quantify your risk a lot easier and you're not taking massive risk on it. So yeah, we've got a bit of a washout here. So look how many times we've touched it too. What I want to do is draw it on this chart. So I've got the S&P here, the SPY. So you've touched it 1, 2, 3. The third time around, we just failed here. So it gave it a few nudges. The second time, and it had to have a big run up. So you can see the market's dropped off. Okay, first press down, complete fear, bounce straight back up again. Okay, that's not too bad. Retest it and start to fail. And you've got this little minor high low here. Then it popped up, failed a bit earlier, only slightly earlier than the previous highs. And then you got another big sell-off that just drove us all the way down. And you can see that the more it sort of touches that zone, it's a bit different because we're coming back all the way back up again. So this is a different sort of a market. But what I try to do is look at what it's, what's the action doing? You've touched another couple of times here and failed. So especially on this red candle, it's just topped through this previous high and it starts to fail. So the market's opened above it, rejected it. During the day, it has come off its close, closed up off its lows, but it's a red candle for that day, that session. And then that's just washed out the previous high at a key level, and then it's backing off. So what I'd be looking for from here is potentially a lower high. I mean, if it comes up and starts to fail at a lower level, I'd be looking for that secondary move down. That could be the start of a decent enough sell-off. Otherwise, we could just, from here, we could easily, if you can just draw that up, we could easily change colors. I'm talking about a little pop up here. We could easily just pop up, start to chop around, and you get buyers starting to support a higher level, and then up we go. And it's really just that we're on our daily. It's that bang off the MAs and start to get up, and it could easily jam up through that 280 mark. So really, it's a matter of just waiting to see what happens. I don't like the fact that it's traded quite a few times. So it's a serious support zone up at just above 280, and it has backed off from there. So I'd be just watching this closely. I'd like to see a nice little pop up and then it stall below that level. And if it stalls below that level on a daily basis, that could lead to a decent sell-off, a bigger sell-off anyway. So what do you got? SPY at 280 if it does not take out 278 by Tuesday. Seeing a long way down to 268. Yeah, easily. I mean, if we get this lower high coming play, I'm seeing a lot longer than that. It could easily get down to 256 just off this daily price action. Don't forget, we've just gone this V shape. Like I said, I never trust them. Something that completely wipes people out on the way down. You know, right up here, that's 1, 2, and a secondary leg down, and then we just turn around and go bang straight back up. There's no consolidation down here. There's no retest of the lows. It's just pretty much bang straight back up. I never trust that sort of price action, and I always think that the way it's jammed straight back up here, there's going to be a lot of bulls, especially after they start to look at this overall market or the most recent price action, which is fair enough, and sort of discount this resistance zone, whereas a lot of other people could be buying it here. Whoever drove it up there through Christmas pretty much, it's getting a bit stretched back up here. We've been stretched for quite a while. You can see on the buyers have been holding it up here since about 260 up to 280, so it's quite a big move. I'm more inclined to think this thing starts to stall. We pull back off that high. I'm more inclined to start, if we see this type of price action, it gets a bit choppy at a lower level below that 282, say, I'd be inclined to think that's going to drive straight back down. And I reckon if that's the case, we get this lower high coming into play. Forget about 268. This thing could drive down to 256 easy. It'll be interesting to see how it goes. We'll see. RMS, I've missed it. This AM did not put my. Go, you Lauren. Right, it happens, Dorian. You're on SPT, aren't you? I think. All right, let's have a look at last couple Lauren's got here. CGR. Did we look at that? Oh, we're on that. So we're at CGR. We talked about that, didn't we? No. All right, let's just mark up. CGR is quite clear. You've got this market's pressing high. You've got what we call a complex correction. For anyone that doesn't know what we're talking about, a complex correction is, I'll draw it up. If I can open this up. Okay, that way. So when I talk, this is, I'll draw it. Oh, no, that's your corrective phase. All right, we're correcting here. That's just your normal standard everyday correction. Correcting here, correcting here. A complex correction, or I would look at it. If that's your uptrend, a complex correction is more. If we do blue, you start to bang down, and then you might jam back up again, and then start to really correct. So this is all of a sudden this becomes on the longer term time frame. So say the pink was the daily, that's just your daily uptrend. A pullback on the daily uptrend, but all of it is just a move back as a move up is one move up on the weekly. All of a sudden you get this complex correction, which means that the daily is going into complex correction, and the weekly might just be had a big uptrend, a big downtrend, and that's what you're looking for on your weekly. Does that make sense? So this is on your daily chart. This sort of price action is correcting in a complex manner on your daily chart, but it's just a major. It could just be a pullback on your weekly. So this here for me is really just on your daily. It's correcting. It's a complex correction. Sorry, on your weekly actually. So it's a longer term correction. It's correcting lower, taking out a few of these last high lows on your weekly in pullback mode, and then what we're looking for it to come out of that complex correction and rally. So I think I can see what Lauren is looking at. So you can see really your key high lows about here. The market's pressed up. This is your pullback, we've got a few lower highs. Draw that up a bit nicer. A few lower highs come to play. Lower high here, lower high again here. It's sort of accelerated to the downside. We've taken out a few of these recent higher lows in here. Potentially in here's a few minor ones in here. We've taken that out with this complex correction lower, and we're starting to hold high lows again on our way up on the weekly. So if you take all that into account, and just remember it doesn't have to come all the way back down and retest this low. You just follow the daily trend, because on the weekly it's back up. We've had one leg up on the weekly, complex correction. We're looking for that secondary leg up. So that secondary leg up to at least take us up through 65 and so on. Go down to that daily. We're potentially starting to hold the MAs here, starting to look at good. So if this starts to pick up and we can get a minor high low on our daily chart, yeah, jump in looking for a press up through 60, then potentially up through 65 and so on, if that's the case. But we'll have to see how that goes. DTL, we'll get through that. DTL, I've been liking this. I'm just failing to take it as an alert because it hasn't got that many offers in there. Actually, no, it's stacked up a bit. So that's data 3. Again, similar type of scenario. You're getting that complex correction down. You can see lower highs come into play of this longer term trend up. And it's starting to come out holding a high low here, another high low here. Starts to take out some of those recent lower highs, and up she goes. And I guess it's quite clear what's happening on that weekly. Just draw it up, cross the highs. That's your complex correction. We start holding a higher low, we break up and out, and you're looking for your entry pretty much off a higher low on the daily chart. If you go down to your daily, potentially through 170 with a stop at say 157. It might be quite wide risk, so it'd be nice if you can refine it, or you get the opportunity to refine it a bit from your daily charts. But at the moment, that could be the trade through 170. So really, it's just increase volume. Look at these volume candles here. Good volume, good volume. Okay, a couple of red days, some volume getting soaked up a bit there, but it's easing off and then picked up again on Friday. A good little rally. So someone's jumping in, some buyers are jumping in. So that there is really, once you get that volume pick up and it's starting to look like it's pushing higher, taking out a few, especially this lower high, that for me is a good sign that 160 is going to hold. So what are you targeting? You just want an entry now. If that's going to be your entry at 170, then so be it. Trade through 170. You got your risk just below that one. Hopefully volume keeps coming in. See where you're going to go to. Just stepping back onto your weekly. Okay, we take out that high at 170. Next, we could have a few issues with these little highs at 174, but I wouldn't suggest so. Next one, potentially high of 186, and then up to the $2 mark. So all in all, it could be a good little trade that could play out. Last one, let's just get DRM. DRM's just gone. Again, that's a bit like SLR. I think we're just talking about inside high low. If you got it through on Friday, pretty much through that high at 46.5, so you bought it at 47. It finished at close at 47, so close right there, but your risk was really below the red candle, which is below 45. A couple of cents risk is worthwhile because it's a nice clean entry. Daily's up. Weekly starting to lift. Look at it, it's lifting out of long-term sort of consolidation potential. That consolidation through last year is starting to lift on the weekly. So the weekly's looking good, daily's looking good. They're both in your favor, and it's just a matter of watching, probably dropping it down to your weekly to see what resistance zones are going to come into play, where you might find a bit of pressure. Yeah, that one's good too. Let's just get down here. So all in all, looks good. Hard to draw though. CRG. Oh, did I say CGR? I just saw where that went to the chat. What were you looking at there, Ola? What stock were you just talking about there? Parabolic? Was that the SLR? Sorry. Anyway, we'll look at the last one. MTN. MTN Lee Creek. Wait, did I do that? Okay, talking about US stuff. Let's just get over here. Let's check it out. Stock MTN M Vale Resources, is that right? Yep. Okay. So I'm guessing this is one entry at 222.5. Yeah. Look, so that's not bad to see. I mean, if you get these sorts of things, and what I like to do a lot of is focus on, I'll go back to the weekly, step it back a bit. So you had a good pullback off the 300 buck mark, good clean out. So that is really a good clean out of a lot of this sort of price action. We don't know where it's coming from. It's still, it's had a big rally up here near vertical. This clean out from pretty much when the market started rolling over, essentially off its highs, big pullback, tried to go again, had to clean out a bit more. So that's a good clean out. So pretty much if you're holding it, you've had that chance. So there's always going to be buyers. The market's run up. You get that first pullback, they're not going to get out. There's going to be traders that have tight stops. They are going to get out. But as soon as it starts to pop up again and starts to fail, maybe those buyers that didn't get out through here on this first pullback are going to get out in the second pullback. And that's where you lead to, and then it's probably going to be a thin market on the buy side, which can drive it down a lot more. People will be chasing it lower. But all in all, what you're seeing is quite a few, I guess, couple of months where the markets drove lower. So it's had more than enough time to clean out, maybe stops here, stops here, stops here. Or buyers say, look, if it gets through here, I'm out. They might have bought it through here and seen a lot of this profit evaporate. If it gets through here, I'm out. Whatever they're going to do. And it has cleaned out enough levels that that it's put a lot of traders back on the sidelines. So taking that in context is where we're at. We've had this big press down, this gap down here, potentially closed that gap. It's always good to see a gap closed. Then it started rolling over again. Right up until Friday, it was looking weak. Don't know what happened. I don't follow these at all. But if you had your stop, I'm guessing just below $2, stop loss of 10 with a price target. Oh, so 210, I'm guessing. Oh yeah, you can have your stop loss. You could put it below that green candle. I like to use high lows. I like to be confirmation. It's got easy chop around here, stop you out at 210, and then hold up above that high low, and then go again. But either way, what we're seeing there is a high low that's just confirmed, and it's even washed it out the tri-day. It didn't finish below that green candle. This low washed out on this red candle, washed it out and finished above. And then the next day, bang, up she goes. You could have taken a nice early entry even through 211 rather than, well, good enough through 211. $10, $10 risk, yeah, 210. All right, 222 and a half. Entry at 222.50 with a stop loss of $10 at 210. Oh, hang on a sec. Let me just readjust what I was thinking. 222 above that high. Yeah, $10 stops would take it at 212 somewhere. For me, I don't like to enter like that on pure candles because I think just my results don't add up too well. But I think you got to trade the US differently. I mean, that's the hardest thing. I've really looked at the US too much. So it'll be interesting to see how that actually plays out. I'm going to keep an eye on that there, Shirley. We'll come back next week, see how it goes. SJI. Let's have a look at that one then. SJI 3063. So entry at 3075. Above that high. Okay, with a stop loss of 75 cents, which takes you down to about $30. Okay, that could clear you out of the way. It can clear you out of yesterday. So if this becomes a top, you get stopped in and reverses on you. I'd even put it tighter than that, below that day low. If you've got a 75% risk, you might as well put it closer to that day's low, in my opinion. So if it's going to take out that low, it's probably going to take you out as well on a pullback. Could be that sort of big reversal. Ah, good. So you trade a lot of the S by the sound of it. Well, it looks of it anyway. Anyway, look, let's just call it a day there. I didn't realize the time. It's got a bit ahead of myself. We'll call it a day. Anyone has any questions, like I said, just send us an email to support@tradesetup.com.au. Even if you just want to have a chat, feel free. I'm a talkative kind of guy, especially when I'm not doing much in front of the computer. Happy to chat. But anyway, yeah, we'll call it a day there. We'll be back in on Monday again at 12:30. It's Australian Eastern Daylight Saving Time anyway. Any of you Queensland, it's an hour back. 3 hours WA, I think still. We'll be back in on Monday. Have a great weekend. Have a great couple of days. And like I said, just keep an eye on this market. I mean, anything could happen. We'll just see how this plays out the next couple of days. Can we set up WhatsApp? Shoot us an email, Vin, what you're talking about, and we'll just send an email to the support line. I'll discuss what you're talking about, and then yeah, may or may not look at to do it. There's actually we've got a Discord channel. If you don't know, Discord is this, which we just talk about. There's Helen's in there, Lawrence in there. Jump in, got Davin jumping in there. There's a few in there. Feel free to jump in there. I can send you a link there. You can just talk. We've got that on all day. Yeah. All right, guys. Thanks very much for joining us. We'll be back in on Monday at 12:30, and we'll go from there. Have a great weekend, and thanks for joining me. If you do like what you see, just leave us a like on the end. That'd be great. Much appreciated. All right, guys. Thanks very much. Speak to you again.